13th of January 2021, and this is Frontier Opening Bell here on Frontier Africa Reports. Thanks a great deal for joining us on the show. With me this morning, we have Ayodeji Ebo, the senior economist and head of research and strategy with Greenwich Merchant Bank, and of course, Bosin Omofaye, the executive editor and chief executive of Frontier Africa Market Report. Quickly, let's get down to business with all the stories that we have, starting first with the market status. I mean, those numbers, the way they crunched and settled yesterday, really matter. So let's give you what they look like. Nigeria was positive, maintains the momentum of, being the market leader in Africa. Positive yesterday by 0.36%, which is Tuesday. BRVM was down by 0.37%. The decline that we've seen in that market lately has probably given enough room for some re-entry now by some investors, whether retail or corporate. For the Egypt market, it was positive, 0.54%. Kenya, the Nairobi Stock Exchange was marginally down 0.03%. And South Africa, 63,535.10, down yesterday, perhaps due to profits taken by 0.35%. Now the key stories, macro and micro stories, starting from Kenya, and that will be getting Bossing to speak to. From Kenya, we know that the tax cut reversal in that country has been scored well by the International Monetary Fund. Now, the multilateral agency has given a nod to that to see how they will be able to get the loan that they're trying to secure from IMF. That's Kenya trying to get some $2.3 billion from IMF. Kenya still, we noticed that the current account deficit for the month of November 2020 was actually at 4.7% of the entire gross domestic product of the country. And Ken Njoroge is now to exit as Cellulant Chief Executive Officer by June the 21st, after the scandals that actually hit that company a few months ago. That was in 2020. Now, Global Credit Rating Agency in South Africa actually suspends a Fidelity Shield insurance rating, and Ethiopian diaspora remittances hit $1.4 billion in 5 months for the full year 2020 to 2021. Bolson, let's get you to speak to the credit that Kenya is trying to get from IMF, and they have now made a position on the tax cuts.
I think the deal with the IMF is to be understood within the concept that Kenya is the IMF is not taking it easy on anyone who wants to get a deal done by this time. There's no free lunch. There's no free money anywhere. There's a whole lot of money, but it's not free. It's someone's money somehow. So despite the trillions of dollars, at least about 13 trillion dollars pumped into the economy by fiscal authorities around the world since last year, and a whole lot more even within the global credit markets, with the cheap money, with interest rates at sub-zero level, at near zero level at some jurisdictions, like almost negative interest rate, like the Bank of England governor, Andrew Bailey, said yesterday. Look, the IMF is not just going to give money without conditions. So those tough conditions, and that includes the World Bank, is cousin, by the way. You know, they're cousins, both the IMF and the World Bank. So they're not going to give anybody any free money. So they want you to put in policies that will ensure that there's fiscal accountability, there's transparency, there's diligence, there's good governance in ensuring that you take before you take this fund. So the whole debt restructuring, the whole funding facility, whether it is EFF or whatever, ECF, extended credit facility, or the extended facility fund, whatever it is going to come through some very serious negotiations or tough line that the IMF is going to demand. Now, if I can speak again, look at the current account deficit by November, which was part of the headlines that you touched on earlier. It's also a lot of consideration in terms of the size of your deficit to the size of your GDP. Now that the IMF says they want the whole debt by Kenya on the table, that's taking it to the doorstep of almost 11 trillion shillings. That's a whole lot there. So is the economy getting better? The fiscal space for the Kenyatta's administration is very, very tight. Finally, I will speak to the Ethiopian diaspora remittances. I think it's one story that everybody is publishing. Some countries like Egypt, Morocco, and now Ethiopia are reporting some level of steady inflows of remittances from their citizens abroad. And I think that's good news for Ethiopia, a very large country, nearly 100 million people by population, or slightly over 100 million. I think one of the three largest population size on the continent after Nigeria, then I think Sudan or so. So it's a very big country, and have a whole lot of Ethiopians in diaspora. You go to hotels in the US, you go to airports and everywhere. You find them everywhere as well. And they have some big names as well, like the WHO. I'm sure the head of the WHO, World Health Organization, who is a Kenyan, will be sending in several thousands of remittances. He's not going to be sending few. He's going to be sending in large, because he gets, I'm sure his pay is very big. And you have so many others like that who are also Ethiopians working abroad. So I'm sure that's a good story.
He has to go through some due process before he can push funds to his country.
well, that is going to, from his pay packet, by the way, from his own envelope.
We'll see how that pans out. Let's move on to West Africa and get Ayodele about to speak to all of these, or to some of these key stories. Number one, Ayo, you know that currency circulation in Nigeria for December 2020 has now been put at 2.91 trillion naira. And of course, that is against the 2.6 trillion naira that we had recorded for the month of November. Now, GT Bank, Zenith Bank, FBN Holdings, all of these key companies and some other companies, most of the firms that you have listed on the Nigerian Stock Exchange have now pushed out their close period for the 2020 result. That's something that investors will be tracking very, very meticulously, if I am not mistaken. For Ghana, the parliament has now approved a $162.9 million loan from Barclays Bank. And of course, ex-Credit Suisse boss Tijan Thiam to launch a blank check fund. Then finally, for West Africa, BRVM, we know that Sonatel is to pay some interest of some 6.5% on the 7-year bond for January 2016. Ayodele, what do you make of the implications that we're likely to have from all of this currency circulation issue? 2.91 trillion naira for December as opposed to 2.6 trillion naira for November 2020. What does this mean actually for the economy?
Yes, looking at the statistics, it shows that the CBN has allowed more currency to be in the system relative to last month, and that would also have its impact on inflation. But beyond that, it's more you to still see this high level of money in circulation, despite the CRR debits that we see from the CBN, and also the plan for the CBN to ensure that to reduce pressure on FX, they're trying to reduce available liquidity in the system. But I think for the common man, or for what we can take away from that is that the what we call the broad money in circulation, yes, it has inflationary pressure once if it's getting too much. And going straight, excuse me, going straight to the news on the close period. We all know that this period in the next 2 months, we'll be expecting most of the banks to begin to publish their results. And for close period is just a way to also provide some form of transparency in the market. It's a period when related parties are not allowed to trade in related stocks. So most of these banks are effectively done, or what it signals is that their result is their financials ready, maybe awaiting approvals, and there will be some parties or some persons that would have had preview knowledge to those financials. So as a result of that, they are both themselves, their relatives are not allowed to trade in those stocks for that particular period of time. So it just helps to provide some form of comfort in the market, and so that people there are no insider trading in the market.
Okay, so let me pick your brain, Ayo. I know I won't want to put you on the spot. I don't want to ask you about projections, but what do you have as expectations from GT Bank, Zenith Bank, these top three banks in terms of their earnings? Do you foresee the possibility of dividend payments by these banks? Because some of the recommendations or suggestions, or if you like, an advice from the IMF is that look, banks all over the world for the year 2020, given the effect of the pandemic, you should, have more retained earnings for the existentiality questions that may be surrounding your banks. So do you anticipate some form of, dividend payout this year for 2020 calendar year?
Okay, thanks. If you look at the result of the banks, even as at third quarter, especially the top banks, the likes of GT Zenith, they've surpassed on a year-on-year basis, positive surpassed their prior year performance, and that also shows that they still have the ability to pay dividend. For the banks, despite they've always find a way of weathering the storm, of trying to look for opportunities even when there are challenges. So this year, there are like two major factors that supported their performances, their bottom line this year. The first one is fixed income rates.
Okay.
You will notice that fixed income rate declined significantly, which if you look at it based on, that's a lot of capital gains for the banks. Also looking at the devaluation that happened this year, for a lot of the top banks, they are long in FX assets. So, and some of them also have swap arrangement with the CBN. So that also boosted their position. And we believe that the banks on the minimum at the minimum will be able to pay prior year dividend. So they were able to keep up with their interim dividend and were positive based on the improvement in their result despite the COVID pandemic period. They will still be able to meet up with, at least projection is that they will retain previous year's dividend.
Okay. I mean, some of them were even actually able to pay half-year interim dividend. So there should be no question surrounding their full calendar year dividends to shareholders or rewards, because as you know, shareholders are really, really looking forward to that. That is something that they will be using to hedge their pocket money and their income for 2020, because some of their rents have not been paid by tenants. Bosun, let's have you to look at the Ghana Parliament that has now approved $162.9 million loan from Barclays Bank, and that is to be channeled into the healthcare sector. How helpful will that be for human capital index in that country?
Well, I think the Ghanaians, everyone is looking for funds left, right, and center, where you can get some cheap money, friends who can contribute, and how you can leverage your healthcare. In particular, in Africa, where primary healthcare to start with had very little to write home about. So if you look at Ghana looking for this type of dollarized funding from Barclays Bank, which is a very big bank out of the United Kingdom with footprints across a number of jurisdictions on the African continent of Frontier Africa. It's a whole lot about trying to be very smart with the way you get credit. And this is a handshake with the private sector in a manner of speaking. We don't have the full details of that, but we'll keep getting details of how this will work out. Whether this is not just, if this is just a straight loan in which you write a check to the Akufo-Addo's administration, or it's a way in which this fund will be channeled to some private sector health institutions in Kenya, and then it's going to be a way for Barclays Bank to also expand its footprints in Ghana. Right now, if you lend money to anyone in telecommunications, ICT, digital technology, and healthcare, it looks like you're going to be in the money for some time to come, because the whole COVID-19 has brought to the fore a whole lot of issues around the healthcare industry in Africa and in every country, including South Africa.
Yeah.
which is one of the most advanced and industrialized economy on the continent. So if you look at Nigeria, the finance minister yesterday says there was no provision for COVID-19 within the 2021 budget. How will it be funded? The DG budget, Ben Akabwese says Nigerian government will do everything and whatever is possible to save both lives and save the economy. But you need to fund it. So you have the COVID on one side, which is being led by the Central Bank of Nigeria, including the vaccine. If you read the newspapers over the last few pages, the news is that the government is urging local institutes and research institutes and all of that to engage in vaccine research, use laboratories and what have you. These things cost money. These were sectors or segments of our healthcare that have been abandoned for donkey years, in the manner of speaking. So to get them back up and running is not going to be a 24-hour thing. It's not a wish like a genie out of the bottle. It's not going to happen. You need investment. You need the personnel. Some of these guys are relocated to Canada, US, UK, elsewhere, who could be in this research institute. So it's a whole lot of going down to ground zero and building back up from there where we are. So we want to see a similar situation play out in Nigeria. Perhaps the government can work with an international investment firm or whatever to also come in and support the healthcare, the drug makers, the vaccine, those who are in R&D in the healthcare sector.
Ayodeji, just quickly before we touch on South Africa, Bolson actually hinted about the fact that the federal government of Nigeria didn't make any provision for COVID-19 vaccines funding. Do you think that's some kind of lack of foresight or lack of proactiveness on the part of the authorities in Nigeria?
Well, I think the first thing is that when the budget was submitted, I don't think much has been achieved, but has been achieved in terms of the discovery of vaccines as at then, and the passage. So I believe that what they may have in plan, there's always that that option of submitting supplementary budget. That's the word, supplementary budget. So rather than trying to, what I think is that government is, rather than trying to project the early or trying to just raise the expenditure in anticipation of that, they would prefer to be able to ascertain what the cost would be. And I'm sure even the National Assembly, within the speed of the light, they would be willing to pass that particular supplementary budget if we need to purchase a vaccine. And they may also try to consider the option of running to private investors or the private companies to support, like they did for the palliatives or during the peak of the COVID-19 pandemic, and a lot of people from banks, they were able to support. So I think they have a lot of options on the table. What the National Assembly did, I think I would say it's commendable to increase the capital expenditure element. Yes, while the jury is still out on how they will be able to achieve that revenue target, we also the budget performance for last year. It was Ways and Means still came to the rescue to support, which Ways and Means is CBN providing support to the government, which is very significant. So I believe that the increase in capital expenditure was positive, rather than also increasing the amount to purchase COVID vaccine.
Okay, thank you very much. Moving on now to Southern African markets, Angola IMF approves disbursements of $487.5 million, and of course Johnson & Johnson, which is J&J now being acronym for Johnson & Johnson, plans to submit vaccine trial data by January the 21st, and Zimbabwean Chambers of Mines now lauding the new foreign exchange rules. What's your perspectives on the Angola IMF approval of $487.5 million? Ayodeji, anything to say to that?
Yes, I think IMF has been trying to see how they can, in this period of economic challenges, trying to see how they want to provide support for African countries. And it's also been a period where some of the reforms they have been trying to push. So now most of the companies are at their mercy. So a lot of the concerns they've always raised in their periodic, IMF Article 4, their periodic reports that they write and raise some concerns. This is the time that for some of those companies, if you want to access this fund, these are some of the things that you need to put in place. And for some of the companies that have been, or countries rather, that have been able to access the funds, it also provides some form of comfort to some external to foreign investors, because they know their minimum requirements that you would meet. It's just like when you come to Nigeria, there are some states that have been able to access IMF funding, or what I would say World Bank rather, World Bank funding. There are there are criteria that they use before you can access those funds. So potential investors in those states or potential investors in those companies would see may raise the bar, or may see some form of positive for them to support. Yes, but we all know what characterizes across most African countries, that infrastructure deficit,
Yeah.
that income inequality, all those things still pervades the countries, that there's still a lot that needs to be done for us to increase our earning capacity, to increase our purchasing power, and for the economy to grow.
Across frontier markets in Africa. Bosun, let's have you speak to the Johnson & Johnson plans to submit vaccine data trial after the phase 3 COVID-19 trial. This is coming from the southern part, or in fact from Africa. Let's just put that as a whole. I mean, because after we've seen a failure of the initial trials in Britain and other parts of the world, how will that impact the South African country or the economy specifically, given that they are now trying to buy the AstraZeneca and Oxford vaccine from India?
The South Africa can use every piece of good news it can lay its hands on right now. And I think it's in the best interest of all of us on the African continent that we don't allow South Africa to become a basket case when it comes to this virus, as it were. But I think the Ramaphosa's administration is trying its best, getting caught in the middle of all of this. Again, if you are the most advanced and the most industrialized economy, I think this is the price that you pay for it. Part of the good news here on the other side is that the healthcare industry and the pharmaceutical industry in South Africa is a whole lot far much bigger and better than Nigeria, for example. I think, perhaps with the exception of a few countries in north of the continent, to the north of the continent, South Africa is ahead. So they got a whole lot of healthcare industries who are doing R&D for years, and that's why it's easy for them to have been part of the whole Western Hemisphere, US, European, trying to do their own version of the vaccine in South Africa. And it's easy for them because if you look at the economy and also at the commanding heights of the South African economy, they are in bed with the Europeans, as it were. So it's very easy for them to reach across the Atlantic and get things running up and very quickly. And again, it's going to come in with a whole lot of good news for that economy. As soon as the vaccine can be gotten, but what price will it come in is an issue. Will it be at a discount? There are some talks about whether the Pfizer and the BioNTech version of the vaccine will come at a discount of about $10 or to $20 per dose. Would you need one or two? That's a whole lot of consideration again. So, but I think they're making some progress. I think I'm encouraged by what we're hearing on the ground.
So, but just before we go, I would like you both to tie the Zimbabwean Chamber of Mines story together with the Egyptian Iron and Steel's plans to liquidate the Helwan Steel factory in Helwan Steel factory, basically in that city. The reason is because these are mining stories, actually. It looks like that sector is heavily being challenged because if we look at the factory in Helwan, it says that they've been having so much of challenges. They've been posting losses in recent times. And so this is also a government owned company. So they need to find a way to mitigate losses. What do you make of this development, Bosun?
I think for Zimbabwe is a bit of a different story. What the Chamber of Mines folks were talking about was that they like the new foreign exchange rules. We've seen some stability in the Zimbabwean dollar over the last some period of last year. How they managed to get it done, I don't know, but I'll say thank you to the the Minister of Finance and the Central Bank Governor for just what they are trying to work on. They've tried to move away from the US dollar and try to float their own dollar. And I think I saw some news yesterday evening on Twitter about what more the central bank is trying to do. I think they're trying to bring on board about a $50 notes of their own Zimbabwean dollar. I think they're trying to onboard to just take off the shackles of the US dollar and try to set up a new foreign currency. Last year, they set up a new FX auction, a weekly FX auction, I guess. I don't know, I can't remember whether it was exactly daily or weekly, but they set up an FX auction, which now provides a two-way code for their own dollar, and that seems to be helping. So I think they are finding their way. I think they've learned from many years of being in trouble with the exchange rate that finally they seem to have found that vaccine for the currency, if you permit me to use that, for their own dollar. And I think they're injecting the doses in. And I think that's why the Chamber of Mines will say, oh, yeah, we like it. Because if you're going to export your mineral products and you look at the currency at which you are getting your earnings back into the country, if it's not good in the currency that in which you are holding it, you know, you just make it. So for Chambers of Mines to say we're happy with the rules around the foreign exchange, that's a thumbs up for the administration in Harare.
Okay, Ayodeji, anything to say perhaps around the outlook for market today? I know we've run out of time. If perhaps in 30 seconds you could give us some kind of a forward guidance for the markets today.
Yeah, I think we've seen investors have been cautious, and we expect that investors will just try to maximize and buy at the best price. So we don't expect any aggressive move in the market today.
All right, Ayodeji Ebo, Senior Economist and Head of Research and Strategy at Greenwich Merchant Bank. Thank you so much for your insights on the show today. Bosin Omofaye, Executive Editor and Chief Executive Officer of Frontier Africa Markets Reports. Thanks a great deal for giving us your analysis this morning on Frontier opening bell. And we do hope that all of these analyses will guide and shape investment decisions for our viewers today. I'm Temple Ashaju signing off to have a lovely day ahead. Bye for now.